Today, we're going to take a look into the aging of America and the growing need for long-term care.
What used to cost to take care of an elderly 10 years ago is much more now. And how it's going to be 10 years from now is going to be significantly more.
Hello, I'm Chris Evert, and you're watching Today's Health, the show that gets right to the heart of matters concerning your health. As Americans grow older, health care bills grow too, and unfortunately for many, their income doesn't. Let's take a look at why long-term care has become the greatest health care need of the elderly today.
You've been saving all your life for a comfortable retirement, and you may feel financially secure. But perhaps you haven't thought about the possibility of a prolonged illness or disability.
Sure, your health insurance or Medicare will pay for short-term medical treatments, but what happens if you need long-term assistance with everyday activities, like eating and getting dressed? This assistance, called long-term care, is rarely covered by health insurance and can burn through your savings at an alarming pace.
Long-term care is the type of care that generally is associated when you get older. Usually it's resulting from a loss of your activities of daily living, such as eating, bathing, dressing. It's also common with cognitive impairments, such as dementia or Alzheimer's.
Odds are that you will need this type of care at some point. Today's 65-year-olds have a 9 in 10 chance of living to 81. And according to the Department of Health and Human Services, 60% of them will eventually require long-term care.
The ratio of the aged compared to the younger people below 65 is rapidly changing. That ratio is really going askew. And people are growing older. The only problem is, as we get older, we get sicker. And the burden of healthcare cost is going to rise exponentially.
But this is not just a concern for the elderly. About 40% of those who need long-term care are between the ages of 18 and 64.
An accident, an illness like MS, Parkinson's, these can all occur, in people in their 40s, people in their 50s.
No matter what your age, you can't count on the government to pay for long-term care, especially if you have any savings or assets. Today, 58% of people who receive care at home or in an assisted living facility pay out of pocket.
So just how much does long-term care cost? On average, a private room in a nursing home costs $5,000 a month and can be double that in some parts of the country. Home care is only slightly less, and these costs are expected to grow rapidly in the future.
Planning for long-term care now will not only help you protect your assets and savings, but also give you the greatest possible control over how and where you receive your care.
Learn more about the myths associated with long-term care. Brought to you by Prudential Financial. Next on Today's Health.
The human body can last potentially up to 120 years. And even our life expectancy has changed. 1900, it was 40. Today, a girl born today will live to be 80.
Welcome back to Today's Health. Now that you have a good idea of what long-term care is and how much it costs, you might be wondering how people pay for it. Let's examine several common myths about who pays for long-term care.
Why do I feel real pain which travels?
Myth number 1, your health insurance pays for long-term care. Almost half of people who have health insurance mistakenly believe it would cover most of their long-term care expenses.
We're all familiar with major medical insurance. That's your hospital, major hospital illnesses. Long-term care basically in our industry picks up after 100 days. This is extended care that's associated with a cognitive disability, the loss of ability to take care of yourself. These type of illnesses can last, years, 2 years with a healthy person with some type of dementia. It can be 8, 10 years or longer.
Myth number 2, your disability insurance will help cover the cost of long-term care. Disability insurance is designed for people who become ill or injured while they're actively employed. The benefits are intended to replace part of your income when you're unable to work, and coverage usually ends at age 65 or when you retire.
Disability is really not designed to pay for long-term care. Although it's important coverage, a long-term care policy specifically covers care that's needed for extended health care stays.
One of the most common myths about long-term care is that the government will pick up the tab, particularly if you're over 65. So let's take a closer look at what is actually covered by Medicare and Medicaid.
Medicare covers many health expenses for older Americans, but only those that are deemed medically necessary. This can include short-term nursing care or physical therapy if you've spent at least 3 days in the hospital.
Ready for some more? You want to try it, Joe?
But if you need long-term non-medical assistance with everyday activities, don't count on Medicare to pay.
Good.
There's a lot of confusion as to just what does Medicare pay for, what doesn't it pay for, and also Medicare supplement insurance, which people buy. Both of those are designed to cover care under 100 days. So it's very important to have long-term care insurance to pick up that coverage after 100 days.
Medicaid is the federal and state health insurance program that pays for nursing homes for the very poor. The Deficit Reduction Act makes it harder than ever to qualify for Medicaid, particularly if you try to reduce your net worth by giving away some of your assets.
What people don't realize is that they can't just go on Medicaid. They have to spend down their assets and their income. In some states, they're only allowed to keep $2,000. So having private resources such as an insurance policy will allow you greater choice and allow you to protect your assets so you don't need to go on Medicaid.
Another drawback to Medicaid is that the government dictates the type, amount, and location of your care. Only in rare cases will Medicaid pay for an assisted living facility or care in your home. Usually, your only choice is a nursing home of Medicaid's choosing. Let's move on to myth number 4. Your family will take care of you. You may plan to avoid the high costs of long-term care by asking family members to help take care of you. But many people underestimate the burden long-term care puts on the caregivers.
My husband became ill about 10 years ago, and we did not have insurance. And I realized at that time how devastating it would be if he lived a long time.
It's a tremendous burden on someone to try to take care for an elderly relative and take care of their own life. They may be working, they may have kids. So it's a tremendous strain, both physically and emotionally, to provide that type of care.
It's difficult to measure the emotional toll of providing regular long-term care to a loved one. But one study found that among those who care for a family member or friend at least 21 hours a week, 61% have suffered from depression. That figure may be even higher for people who take care of their spouse or parent.
You can spare your loved ones the stress of being caregivers by hiring professional long-term care services instead. But we've already seen that you can't count on health insurance or government programs to foot the bill. That brings us to our final myth. You will have enough savings to pay for long-term care out of pocket.
Well, unless you're extremely wealthy, what happens is that if you need a nursing home or assisted living facility, you wind up spending all your money, sell your house off, and all your savings. Eventually, Medicaid is still the last payer of choice.
Let's take a closer look at the actual costs of long-term care. Most of us would probably prefer to stay in our own homes as long as possible. Long-term care at home for 8 hours a day, 7 days a week, averages $4,300 a month. Round-the-clock care is even more. And the yearly cost for a private room in a nursing home is now $61,000 and climbing. It's no wonder that a recent study found that 2 years in a nursing home could wipe out an entire life savings for most older Americans.
Long-term care is a critical issue for the middle as well as the upper class. If you're not poor enough to qualify for Medicaid, the cost of long-term care could become a difficult burden for you and your family. And even if you are wealthy enough to pay out of pocket, why risk looting your assets? As we'll see, there are other ways to fund long-term care.
Stay tuned to learn more about long-term care and how to pay for it. Brought to you by Prudential Financial and Today's Health.
Here is a very ugly statistic that most Americans spend more in the last month of their life than their entire life.
You're watching a special episode of Today's Health, focusing on long-term care. The good news is, if you plan ahead, there are ways to pay for long-term care without wiping out your savings or relying on the government. One solution is to look into long-term care insurance. Let's find out how it works.
The purpose of most insurance is to offer protection in case of an unfortunate event, a flood, a car accident, an illness. Long-term care insurance works in the same way. You pay for a policy with benefits that kick in should you ever need long-term care.
One of the major benefits of having a long-term care insurance policy is the peace of mind that it provides. You are going to have a place to go if something happens. Of course, the goal is never to use the policy. I mean, you've bought auto insurance, you've bought homeowners insurance, those type of insurances you put in place and you hope that you never need them.
Long-term care insurance does more than help you pay for long-term care. It also gives you greater control over where you receive that care. Many policies emphasize care at home, where most people want to stay, but also cover a variety of other facilities.
Depending on the policy, long-term care insurance can cover institutions such as nursing homes, adult foster homes, assisted living facilities, or hospice centers.
This type of facility is really a go-between your home, private home, and going to a nursing home. The care is almost like one-on-one. It's individualized, and they could be very happy and feel more at home.
And for people who prefer to remain at home, options may include adult daycare, home health care, or personal care, or assistance from a homemaker who performs tasks such as cooking and cleaning.
Adult daycare is designed both for the seniors themselves and for their caregivers. And the caregivers, with a place like a daycare center, have a place to drop off their loved ones where they can be engaged in the day's activities and meet other seniors to share their experiences with. And that allows the caregivers to go on and take care of the things they need to do in their day.
Here we go. So what is the name of this
I
dance?
have a place to go, so you get up and really get into it. It's like going to work again.
Well, it makes me feel great, actually. I come every day of the week. I had a stroke 10 years ago, and I never thought I could even barely walk after that, let alone dance.
Here we go. Hip, hip, hip. Come on, George.
These benefits can make coping with an illness less stressful and less costly. But with so many options to choose from, shopping for long-term care insurance can be daunting. So let's talk about some important factors to consider in choosing a policy that is right for you and your family.
Looking up, he saw the sun beginning to descend over the Mississippi.
First is the amount of coverage. This is usually defined in terms of a maximum daily benefit, the maximum amount the policy will pay for institutional care each day. Options typically range from $50 to $500 per day.
Looking at the cost of care in your area and other family factors, you can design plans that are sort of Cadillacs, that are unlimited, that will pay forever, to more of a middle market plan, 3 or 4 year duration, all the way down to a base coverage that would provide 1 or 2 years of care.
When it comes to home care, many policies offer coverage as a percentage of the daily maximum benefit for institutions, usually 50 to 150%. Another factor to consider is how the policy determines when you are eligible to receive benefits. Many policies kick in if you develop a cognitive impairment, such as Alzheimer's disease, or if you are unable to do a certain number of activities of daily living.
Policies today require failure of 2 of 6 activities of daily living: bathing, eating, dressing, transferring, and or cognitive impairment, such as Alzheimer's, dementia.
Another detail to look for is the waiting period before you begin receiving benefits. Also called an elimination period, this is the number of days you must pay for your care out of pocket before your benefits kick in. It's similar to the deductible on your homeowner's insurance.
Because of the rising costs of long-term care, what seems like adequate coverage today may not be in 5 or 10 years. A feature called inflation protection will increase your benefits to keep up with rising healthcare costs. This feature is essential for buyers under age 70.
Purchasing long-term care insurance at a younger age has several advantages. One is that it may be easier to qualify. Another advantage is lower premiums. In fact, people who enroll at a younger age are likely to pay far less in total premiums over time. It's never too early to start thinking about long-term care insurance. But maybe you're not sure this is something you really need. Here are the top reasons most people give for buying long-term care insurance. To maintain control over how and where long-term care is provided. To receive care at home for as long as possible. To avoid becoming an emotional or financial burden on family and friends. And to protect assets that could be depleted by the high costs of long-term care.
We both have long-term care insurance. We have had family who've been in nursing homes for a very, very long time, and even though they've been independent, they've worried terribly about their resources. And you also realize that it's a terrible burden on children sometimes when they're trying to put their children through college and also take care of elderly people. The sad fact is that very often it's the women who are left alone and have no caregiver, and very often they might be too old to completely care for a husband and want help at the house, and someone who can come into the home and give them a hand so they can stay together. And I think we looked at those options and felt it really was what we wanted to do.
A good insurance policy can help you pay for long-term care while preserving your assets, so your spouse can maintain a comfortable lifestyle, and you'll have something to pass on to your children, grandchildren, or favorite charity.
After the break, we'll show you ways to protect your future when it comes to long-term care. Brought to you by Prudential Financial, next on Today's Health.
Welcome back to Today's Health. Long-term care insurance is one of several ways to plan for long-term care. In our final segment, we explore other options and list some steps you can take to determine which strategies are right for you.
If you've been living in your house for many years, chances are you've built up plenty of equity. Maybe you have even paid off your mortgage. This makes your home a valuable source of funds that could help pay for long-term care through something called a reverse mortgage.
Here's how it works. Homeowners age 62 and older can convert equity in their home into cash without paying anything back for as long as they live in the home. There are no monthly payments to make, and the loan is only repaid once the owner dies or sells the home.
And how are you today?
Oh, I'm just so happy.
Another possibility is to purchase life insurance with a cash value that increases every year. You can draw on the accumulated cash value to purchase a home, fund a child's education, or if necessary, pay for long-term care. But keep in mind that any money you take out will reduce the amount that is paid upon your death.
Yes, I think this is the better plan.
Paying for a long-term care policy, it's important that it not be a strain on your financial resources. Medicaid is there for people without assets. They can depend on that, the government's there. But if you have assets to protect, it's designing a plan that will protect those assets, but without putting a financial strain on your budget.
Now that you're aware of several options for funding long-term care, what's the next step? First, look over your finances and determine how much you could afford to pay out of pocket for long-term care. Next, talk with family members about the likelihood of needing long-term care and the difference between the potential costs and what you can afford. Then look into ways to pay for the difference, such as reverse mortgages, life insurance, or long-term care insurance. Discuss these options with an independent financial planner to find out which is right for you.
I see long-term care products evolving that will, some of them may combine life insurance and annuities, but more options to help you design a plan that fits your budget and financial situation, and also policies changing to meet the changing delivery system. As more type of home care, smaller residential type care facilities evolve, we'll see policies designed around meeting those new delivery systems.
People are getting older, they're living better lives, and they're living a lot longer, enjoying themselves, as opposed to just pining away like it used to be thought of in the old days.
Don't put off planning for long-term care. By the time you need it, it'll be too late. So check with an insurance professional and begin securing your future against the high cost of long-term care.
The more informed you are about the latest medical developments and health issues, the better quality of life you can have. If you'd like any more information on any of the topics discussed in today's show, as well as the latest news in today's health arena, log on to vstar.com. For everyone who helped make the show possible, I'm Chris Evert saying thank you, and join us next time on Today's Health, the show that gets right to the heart of your health.